What's going on, everyone? It's Paul, the 920 Trader with 920 Trading and Trading Decoded. Today is Tuesday, January 16th, 2024, and this is how we traded SPY today. Okay, so trading for us doesn't actually begin in pre-market, but we are setting up the chart in pre-market to look for potential plays throughout the day. So what we do is we're looking for the pre-market high. We've got a pre-market high of 476.68. We've also got a pre-market low of 473.69. So right off the bat, we're thinking, hey, we might have about $3 worth of movement from the bottom to the top or from the top to the bottom, whichever the case is. So I've got a line there at pre-market high. I've got a line at pre-market low. I've also got this line right here. So the question is, why do I have this line in here? Well, you see all this action at this level. And if I go to the 5-minute chart, I've got double tops. I've got a double top over here. I've got a double top over here. So I went ahead and put an additional line on my chart today to see if we could get up there, reject off that zone, or continue pushing up to, again, that pre-market high 476.68. So right off the bat this morning, well, actually pre-market again, it seems like the last several days we're getting across in pre-market. And when that happens, obviously we can't trade options pre-market. So we wait for that first fresh cross. Now, coming out of the gate this morning, those first couple of candles pushed us to that level that we were looking at, 475.45. And again, no fresh cross right off the gate, so we're not going to play that. So we took that rejection off the top, that 475. Now, if we look back to Friday, we had 478.50 as a level actually from Thursday pre-market that we were able to reject off of first thing in the morning and take that back down. But at any rate, 475.45 is the level that we were looking for. We rejected off of that, came back into the fishtail. Now, the fishtail, for those of you that don't know, is the space between the 9 and the 20. So we had some potential fishtail plays right in here. We also had VWAP. VWAP was bouncing around right in this area. Now, as you can tell from my smiley face, below the line, those are puts. Above the line, those are calls. So I took this smiley face fishtail play. So in other words, that fishtail play is an aggressive type of move based on the 920 rules that I have established at 920trading.com. So I took this play right here at 9:37. So we're 7 minutes into the trading day. I took it because, number one, I had VWAP up, directly overhead. I also had the POC. The POC for the morning was right up here, right around 475.11. So that was my safety zone. Okay, so in other words, if I took a position on this candle right here at 9:37, my next candle turned around and breached the VWAP and the POC back to the upside. At that point, that trade becomes invalid. So it's not that it was a wrong trade. It was one of those that wouldn't have worked out. Now, this particular trade absolutely worked out. It was a wonderful trade back to the downside. Now, remember, 473.69, that's our pre-market low. We were using that as a target. So that could be our first. Actually, we had this noise in here bouncing around from later in pre-market. 8:02-ish, hour and a half or so before the market opened. But we were able to push down and actually make it below our target of 473.69. Now, I did not close out on either one of these candles. My reasoning was we still had room to the downside if it was able to breach that and continue down. I believe 472.60-ish, right around in there. That was a double bottom from last Thursday on the 30-minute. So in other words, if we were able to push down, I didn't want to close the trade prematurely. As a 920 trader, we rely on the 9 as our resistance on the way down and as our support on the way back up. So I gave it a couple of minutes to kind of bounce around at this level and closed out at 9:54. So it was a 17-minute trade. It was an absolutely beautiful, beautiful, very well executed trade. And again, it was a bit more aggressive than what a lot of people play. So a lot of people wait for that cross to the downside. Then that first red candle that closes, that's their signal to get into. They're getting rid of all of this support down here. So they're breaching all of this support back to the downside before they got into the play. But at any rate, this was an aggressive move, but nevertheless, it was a very, very nice move to the downside. Now, As you can see by the smiley face right here, I took this play back to the upside. Excuse me. The question is, why didn't I take it on a breach of? So we had this almost a double cross. Again, fishtail play here. I could have taken it anywhere in here and potentially ridden it up to uh, at least VWAP, but I didn't. I had that same thing happen to me on Friday. It stopped me out. It was a decent loss. Today's a new day. We don't like to have a bias, but we do have these things in our head. So at any rate, I waited. We had a 3-minute double top at this level, 474.77 that I wanted to clear. I wanted to breach that back to the upside before I put on the trade. So we did breach to the upside. We got over to the upside rather. We did breach VWAP, came back down, tested the 20, came back again, and breached at 474.77 to the upside again. There we go. That is our our yellow smiley face. We took this thing back to the upside. I didn't close it out anywhere in here. I actually waited for this double cross back to the downside to say, hey, that play is over. I was going for that pre-market high again, 476.68. 476.68. Now we got close. We ran up there within, I don't know, 6 or 7 cents of it or so. But at this point, right here at 1036, I basically said, you know what? I don't want to take a chance. I had some thin volume, and I used something called volume profile. I had thin volume, and I didn't want a chance running back down to this 475.45. I wanted to secure what I had, and it was also a nice play back to the upside. Now, this is where it gets really, really interesting. We had a double cross on this candle right here, and then our next double cross to the downside. And remember, we don't take that first double cross after a run either to the upside or the downside. And again, what a double cross is you open above the 9 and close below the 20. So a double cross here, a double cross here. That can also happen back to the upside where you open below the 9 and close above the 20. So we had a double cross here, kind of bounced around for a second or two, but we had all this support sitting in here. On this candle right here, I said, okay, it's a good play because we've breached this, our latest support. So I have the blue line, the 9. That's my resistance. That's my safety zone up here, that blue line. So I took a position right here. And at 11 o'clock, we had Fed speaker at 11 o'clock today. Fed speaker Waller came out. I have no earthly idea. I still have no earthly idea what Fed speaker Waller said. And it just absolutely dumped. Now, you want to talk about getting out of a trade very, very quickly. This is a dollar candle. This is a $1 candle. So it essentially opened at 476.21 and closed at 475.16. So it's a little over a dollar candle. When you can take a play like that and in less than a minute pick up $1 worth of SPY movement, that is an absolute banger of a trade. And look where we actually, we got down a little bit below that. We got down to 475.01, picked up buyers again. But when you have a play back down to VWAP, a really, really quick play back down to VWAP, take that play. Take it off the table, close out the trade, mark it out of the order, get out of the play at that point. When you can pick up a single candle, a $1 move, get out of the play. You can always get back in. Because what happens so many times when you have a violent move either to the upside or a downside, and again, it's a $1 move in a minute. When that happens, it can just as easily bounce off of that VWAP and take you back up and turn that really, really, really nice trade into a losing trade. And we don't like to do that. So take the dollar, move on down the road, and wait for your next play. Now, there were obviously some plays back to the upside. We bounced around here for a few minutes. We bounced around. We got above VWAP again, then had pretty close to a double cross to the upside. Through that same level, remember 475.45 double cross, fishtail play, and ridden it up. I didn't play any of these moves. I missed this move right in here, folks. I missed it for whatever reason. I was not in this play. I would love to say, oh yeah, I caught this one too. It's a nice double cross here, another nice double cross back to the downside. I did not take that play, and I was not about to chase this play. Now, there were other safe entries. Absolutely other safe entries. We had an entry once we breached this 475.45 again to the downside. That would have been a nice entry. And the breach of VWAP, that would have been a nice entry. The recapture of the 9 back to the downside, that would have been another nice entry. We had a lot of entries along the way, but I didn't take any of these plays. Now, generally speaking, what I like to do is I like to play that first hour and a half, 2 hours, and then wait, see if there's anything later in the day. A lot of times I'll wait till power hour, the last play of the day or the last hour of the day, and see if there's something for me. Now, again, I didn't take this play. I waited until we got another couple of tests of VWAP. Took this play right here at 1338. Another really, really nice play. Opened it at 1338. I closed it right in here. Closed at 1359. So we had nice movement to the downside. It was a nice play. I also took this play right here, and the question is why? Well, we recaptured the 9 on this candle, and I took a play right in here and wrote it on down. Got through again. Remember that pre-market low of 473.69. So wrote that down. So I was able to kind of double dip on this play right here. It was a very, very nice play back to the downside. There were plays back to the upside, but at that point, I had what I have 1, 2, 3, 4, 5 really, really nice plays. At that point, it was a good day. Now, this is one of the rare days where I don't take a loss. I didn't take a loss today. Generally, I'll have 1 or 2 losses somewhere throughout the day. But today I didn't. It was one of those kind of rare days. If I would have played later in the day, maybe I would have taken a loss. Maybe not. You never know. Now, here's the 350 candle because, again, we're always looking for that 350 candle to see what we can do. So here is why I didn't think 350 today would be a good play. Number one, we had the POC right around in this area, so about 474.28, somewhere right around in this area. We also had VWAP up here just a little bit higher, so about 50 cents higher. Now, late in the day plays, if you don't get super, super quick movement in your candles or any kind of pullbacks whatsoever, you will get destroyed by theta. So it's the time decay of money that will destroy you as a trader. You think, hey, I'm moving along. I got 50 cents worth of movement in that last 5 minutes. But unless you're a couple spots in the money, if you're at the money, probably won't gain a whole lot of value, particularly when you're dealing with maybe a couple of candles, you get some pullbacks, 10 cents here, 15 cents there. So those were the 5 plays that I made today. We had very, very, very well-defined plays. You can look back at the 920. You could play every single cross to the upside and every single cross to the downside. And you can play every one of those. You can take a conservative approach to those. And guess what? There's an expected value every time it crosses to the upside and an expected value every time it crosses to the downside. Now, in the testing that I've done, I looked over a 6-month period and I went candle by candle by candle by candle over a 6-month period. And I did all of the data crunching, not crushing, but crunching. Your average expected value, so the gain of SPY every single cross to the upside, and again, that's over a 6-month period, candle by candle, is 53 cents. So 53 cents worth of SPY movement to the upside on every single cross that you have. Now, to the downside, now in trading, remember, generally speaking, there's an escalator up and there's an elevator down. So we get slow plodding moves to the upside, and to the downside, they generally are much quicker moves. So to the upside is about 53 cents. Now, this is really interesting. To the downside, so upside is 53% or 53 cents. To the downside, we are talking over $1 move. So it's almost a 2-to-1 move to the downside. So in other words, puts, generally speaking, pay better than calls. So that is how we traded SPY today. It was a great day. It was a really, really good day in our Trading Decoded Discord group. So if you like our videos, please go ahead and give us a like, a share, a comment, and please subscribe to our channel. We would greatly appreciate that. Now, if you're interested in live daily trading, so every single day from 9 o'clock Eastern time until the market closes, we are in there doing live daily trading. We talk about the trades, and it's an interactive session. So come check us out. We're going to give you that first week for free. Now, if you're interested Also, in the 920 trading strategy, all of the information is available at no cost to you. Go to 920trading.com. Everything is there. A to Z, soup to nuts, everything is there. There are no hidden costs. You can get it. You never have to pay for anything. 920trading.com. But again, if you're interested in that live trading experience and mentoring, so we do both small group mentoring and one-on-one mentoring. Join our Discord group and you will get from me a 30-minute session. No cost to you. Again, we'd love to have you as the group, in the group rather. Come by, check us out. Love to have you. So again, I hope everybody has a great day today. Have a great evening. And we will see you guys in the market.